Yogendra Kapoor, it is traditional wisdom in India from our, from our grandparents and their parents' days onwards. If you have money, first you take a big chunk of it and put it in gold and you lock it up, somewhere, and then you do whatever you want to with the rest. Now, I come from the south, either gold or Kanjivaram saris, which both act as, it's a stuff that you can, pawn for cash later if you want to. And looks like, we are going back into that, of this traditional wisdom that, at the end of the day, gold is gold. And this time around is making sense. There's so much of uncertainty. It is that uncertainty in global markets that is driving this surge towards gold. So when you talk to the average investor, what would you tell them? Because they're like, this is what my nani told me, this is what my dadi told me, and now you have financial advisors saying this.
Right. You see, there is an old dictum when we talk of traditional wisdom.
Yeah.
I think you missed out on one thing, which is that you should not put all your eggs in one basket.
Fair enough.
So that is also a part of an old wisdom. So my point is that we need to move with caution.
Okay.
The point is that the kind of gains we have seen in 2025 with respect to gold and silver, they should not be taken as benchmarks going forward. That we should not expect the kind of gains that we have seen in this year. There are several factors which have led to this increase. And I also feel that 2026 is a year in which basically one should be very cautious in terms of, basically spreading their investment. And it's important that their investment should be divided into different assets. Yes, the investment also is a criteria where you need to see how much you can invest. It's not that, if you are seeing a sector which is going good, that you are suddenly borrowing up funds to invest in that sector, because borrowing also has itself an inherent cost. Because if the prices don't increase, then you have to understand that it's a kind of a two-edged sword where you tend to not only lose on your rate of return, you end up losing your precious savings also.
Fair enough. I was only asking the perspective of the existing investments and now rebalancing your portfolio.
Absolutely. And my point is that going forward, I would certainly believe that if we look at gold and silver, whether the kind of increase that is there, we have seen in 2025, is it sustainable? Or how do we look at 2026? Are the prices going to come down or they're going to go up? My answer is that, and my assessment, that it will certainly go up, but we should expect a reasonable return of a max of 25% over the prevailing prices. And that's the reason why I say that it's very important that one should divide their investment. The good part about India is that we are seeing that apart from urban consumption, we are also seeing the rural consumption going up. We all know that India is a consumption-based economy, and I see that both gold and silver, they are a kind of assets now where we see that specifically silver, where we see the industrial demand has gone up. And you see, when industrial demand goes up, it makes sense on the ground because we see that it reduces the cost of doing business. When we look at people investing in EV industry, solar panels, electronics. So these are things which reduce the cost of operation of the business. At the same time, for a consumer also, we see that it ends up in creating savings for them. So I think what is important is that these are things which are making sense on the ground in terms of their utilization and consumption. And that's what I would like to say.
Okay.